How is it going, traders? This video will be the part 1 of the trading model, which is the weekly range trading model or the one shot one kill model. Here the quick disclaimer before going into the model. Thank you to MMXM traders, ICT, T-Trades and M-Trades for their teachings, and all the concepts in this model are taught by these mentors, and I do not claim any ownership over these concepts. So let's get into the first part of our model. So the first step is high time frame perspective or the daily chart. So going into the daily chart. So I myself rarely focus on the monthly or weekly charts because they are conflicting or biased. So you have to only focus on the daily chart. The first step is to identify the price phase or the phases of price delivery. So before getting into any analysis, you have to assess in which phase of price delivery we are now. Is it expansion? If it is expansion, then wait for the next phase to unfold. If it's consolidation, then wait for either side of the range to get manipulated and then trade the next side. If it is a reversal, then it would be at a key level, like for example a relevant high, low, or internal range liquidity. And also the daily closures or the next day model will be used with each pair of price delivery to confirm the reversal signature within each pass. So here are the schematics. For example, a consolidation range high, a consolidation range low. So we are trading inside the consolidation range. So in this type of price action, we would wait for the either side of the range to get manipulated first, and then we would trade to the other side. So we have a consolidation range, a range low and a range high. You would highlight that and wait for the either side of the range to get manipulated and then trade towards the other side. The second phase is the reversal. So a reversal will occur at a key level. It would be a high or a high time frame low. Then you would wait for a reversal signature, which is a candle closure. We will be talking about this in the next topic. The next one is retracement. The retracement will occur in a trending market. For example, we have that low already established, an order block and a fair value gap. Then we retraced into that fair value gap and a closure inside the range and then expansion to the upside. So we will use these phases of price delivery to know where the price is heading and to read the market sentiment. And for the expansion, so when we have expansion, the maximum expectation per the expansion is 3 days. For example, a 3-day expansion into key level and then another phase, which is a reversal, or a 3-day expansion, then a retracement. So on the daily chart, you have to identify the phase of price delivery first. So here I am the gold daily chart. We are expanding a 3 days of expansion. So going into the next week, I would wait for then another phase of price delivery to unfold and trade in the direction of the price to the upside, or waiting for a reversal or another phase of price delivery. Going into the new week, we retraced into these down close candles and then another expansion to the upside. Now going into the new week, we have a consolidation. I will mark the range high and the range low of this consolidation range. Now we break through the consolidation range to the upside. I would wait for a reversal signature. If it is reversing to the downside, then I will trade to these lows, and if it is breaking through the highs, then I will trade it to the upside. So this candle closed above the consolidation range high with a bullish signature. So I would trade the continuation to the upside. Going into the new week, we had a retracement into this fair value gap and a reversal into expansion to the upside. Now we have 4 days of expansion, so I would wait for another phase to unfold and then trade it in the direction of the trend. Now going into the next week, we have a consolidation range. I will mark the range high in the range low of that consolidation range and then wait for another phase to unfold and trade it in the direction of that phase. So we breach through the consolidation range low. If I see a reversal signature, then I will trade it to the upside of consolidation, or if it is not a reversal, then I will continue trading it to the downside. So as you can see, we have a reversal signature form at the lower range of the consolidation. Now I could trade it to the consolidation range high. Now in the next section, we will incorporate the next step model, which is the remastered version. So actually, next step model focuses on the expansion days following reversal. In this remastered version, we will incorporate the daily in the weekly profiles to refine the entries, and we could trade the weekly range. Let's talk about the model structure. The next day model actually involves 3 or 4 candle combination, and we will be only trading the expansion days. The candle 1 is a pre-reversal candle. The candle 2 is the reversal candle, which is closing inside the range of the first candle and indicating a potential for the reversal. The candles 3 and 4 will be the expansion candles. And we will need to draw on liquidity on the daily chart to play the next day model. So these are the schematics. We have a candle 1, candle 2 closing inside the range of the candle 1, and the candle 3 expanding to the upside, and we will need a draw on liquidity, so the candle 4 would also be an expansion candle. Now this is an invalid closure for the next day model. If the candle 2 is closing below the candle 1 with a body, then the model is invalidated. So this is the gold daily chart. We will look for the next day model. We are expanding to the downside, and we would want to see a new phase of price delivery to unfold. So we reach this high time frame fair value gap. I will be waiting for the candle closure signature to trade it to the upside or to the downside. So we reach into this high time frame fair value gap, and we do have the candle 2 closure inside the range, and the candle is closing bullishly above this candle, so I would need the next 2 candle to be an expansion candle to these equal highs or this high above here. The next candle expanded to the upside, and now we have a candle 2 closure inside the range, but we are lacking the key level, so these highs are still vulnerable. Now the next candle took the previous candle low and closed inside the range, so I would expect the next candle to trace to these highs and eventually the candle traded through these highs. So this was the example of the next day model. So candle 2 closure inside the range, and the candle 3 was an expansion candle, and here is the next day model forming again. So we had a retracement, and then this candle taking the first candle low, closing back inside the range, and the next 2 candles were expansion candles to the upside. This is the example of this special case regarding the next day model. We are retracing, we reach into the daily fair value gap, and we do not have that candle 2 closure inside the range. Instead, it closes below the first candle, but on the next candle we closed above this series of downfall candles, so it is likely showing the bullish order flow. So from this point I could trade to the upside, and this low will be a protected low because it is an order block low, and we expand it to the upside. So in these special cases you have to be waiting for the candle 3 to reveal itself, and then after that you would trade the fourth candle. Now for this example we will combine the next step model with the phases of price delivery. So we had end of the previous week on Friday, and we are expanding. We have a 2 candle expansion, and also we are closing above this down close candle, which is confirming the bullish order flow. So going into the new week, I would want to see a retracement or a new further price delivery to trade either to the upside or to the downside. So on Monday we had an expansion candle. On Tuesday we are having the candle 2 closure. The second candle is closing bearishly, but also we have a candle 2 closure to the upside. So we are having a bullish candle and also a closure above this down close candle, which is an order block. So my bias is bullish for the next day. And the next day, which is a Friday and end of the week, so going into the new week, I would want to see a new further price delivery to unfold to either trade to these highs or doing a reversal. So on Monday we had an expansion candle and inside the consolidation range. On Tuesday we took this Monday candle's low and closes back inside the range, so the Wednesday will be an expansion candle. The Wednesday expanded to the upside, so we are having a 3 days expansion. So I want to see a new further price delivery to unfold. A candle 2 closure inside the range. The next candle was a bearish candle, but also we are having a candle 2 closure for potential retracement into a new expansion. We are having an open low high close candle and also a closure above this down close candle, which is an order block. So the next candle was a bullish candle. The next candle after that was also a bullish candle. And on Thursday we are having a reversal signature. Candle 2 closure inside the range. So if we are disrespecting the 50% of this order block, then the bullish bias will be invalidated. So we do respect the 50% of the order block, and also we closed above this down close candle, which is another order block. So I would want to see a continuation to the upside, a retracement into expansion, then a retracement, a stop run, and then another expansion. So we have an open low high close, our bullish candle, and the next day we are having potential reversal candle with no candlestick closure. So we are having a candle 2 closure, and for the days like that I will avoid it because we do not have that candle 2 closure. So we are having a bullish candle from 50% of this week. The next candle was also a bullish candle, and the next candle was a huge expansion candle. So after 3 days of expansion, we would want to see a new phase of price delivery to unfold. And also, we are closing above the series of down close candles. We are having a retracement into that order block and a closure inside the range. We would want to see a next candle to be an expansion candle to the upside. But here you can see we are taking the both side of the candle, which is a low probability condition. But keeping that order block in mind, I would want to see a bullish candle to the upside. In fact, we are having a bullish candle. So an expansion into a retracement into this fair value gap or down close candle and into a new expansion. The candle fourth was also an expansion candle, open, low, high, close. And the candle fifth was also an expansion candle with a huge expansion. So after 3 days of expansion, I would want to see a new phase of price delivery to unfold. We do not have that candle to closure yet. Waiting for the next day, we closed above these without any trading opportunity. Now for the next day, after expansion into consolidation candle into another expansion, now we are doing a reversal, taking these candle highs and closing back inside the range. We will want to see an open high low close candle or a bearish candle. So the next candle was a bearish candle, but we are having a candle to closure inside the range. We also reach into this fair value gap. So you want to see the next candles to be an open low high close or bullish candle. And that idea is invalidated. We had a closure below this candle and a bearish candle. This is it for this video. This was the first part of the model, which was combining the next day model with the phases of price delivery. In the next video, we will be talking about the weekly range narrative or adding the weekly profiles to the next day model. Thank you for watching the video. Make sure to subscribe to the channel and do like the video.